Hi, welcome back to the course Accounting for Creatives. Let's move on to part 4. It's about purchases. In the bookkeeping you have two kinds of purchases. One is what we call investments. Investments are purchases that contain something that's worth more than 450 euros in the Netherlands. It's kind of artificial limit, and you have it's something you use for at least more than a year. So you will have it also like next year still in your company. Think about cars and machines or cameras or whatever you can imagine. If it's one of these criteria, we call it investments. If it's not one of both criteria, then we call it costs. So costs are all other expenses that you make. Costs will immediately affect your profit, while invest is a long-term investment, so it influences your profit in several years. Then with these purchases we also kind of divide two types of payments. You can pay immediately, like with cash money or with a debit card or credit card. So there is not a debt existing to your supplier. Or you can pay on account, which means you get an invoice and this invoice needs to be paid within a number of days. You could actually have a third one, that is when you pay upfront and then later you get your goods or your services, but let's keep it simple for now. So two types of purchasing, investments and costs, and two types of payments, cash and on account. When you do a purchase, it will change your balance. It will change your position in the balance sheet. So let's have a look at an example to see what happens when you do this purchase. We're gonna buy a printer. We already have a computer, but we're gonna buy a printer, laser printer worth 700 euros. That's what we have to pay to the supplier. And we will pay it on account. So we will get an invoice and the invoice will tell us to pay within 30 days. Okay, let's see. What happens on the balance? Well, we see that we receive a laser printer, and on the balance we had this account saying the computer system. The computer system becomes more valuable as there are 700 euros of printer added to it. So the assets will increase. The left side of your balance will increase because of this more valuable computer system. But the debts on the other side, on the credit side, on the right side of your balance also increase because you have this invoice that you have to pay within a month, and it's for the same amount, so both sides of the balance are increasing, which means it's still in balance, and your supplier, your creditor will be waiting for your money, and so you have a debt to him. This means if they both change, assets and debts, that there's nothing changes in the equity. The equity stays the same. You just kind of changed your money for this printer, but you're not richer and you're not poorer. Good, let's have a look at the balance. What happens after you have this balance, this change? Well, we see that the computer system on the asset side has been increased to 2,200 euros, and that on the other side the accounts payable, your creditors, have been raised to 5,100 euros. So we're still in balance and nothing has changed in equity, so there's no profit, there's no loss, we just did an investment. That's how it looks like. Then let's have another example. This time we're going to take the type of purchase that is not an investment, so it's just costs, and we're going to use the payment of cash. And multiple combinations are possible. So to use this printer we also need paper and ink, and we buy these cartridges for like 100 euro. And he pays in the shop with his debit card or with cash money. Let's assume he pays with cash money. And we see, and again, this balance is affected because the assets are still decreasing because we lose cash out of our wallet. So the cash is decreasing, it means the assets are decreasing too. The paper and cartridges are less than the 450 euros, so we don't assume that they increase the assets on our balance. They're just like immediately being used. They will not last for longer than a year, so they're not considered to be investments. They're costs right away. It means when the debts remain the same, because we immediately pay this amount of money to the shop, it means our equity has decreased. It means that buying the paper and the costs immediately decreased also the equity. This is the effect of costs. So a look at the balance sheet after this purchase. We see that the cash is being decreased with 100 euros from 1000 to 900. And we see that the equity is decreased from 5,450 to 5,350 with the same 100 euros. And because both sides are decreased, the balance is still actually in balance. This is the effect of costs on the balance. It changes the equity. Good. Summarize. Purchase can be investments or costs, and it can be paid by cash or by invoice on account. A purchase invoice that you get from your supplier is a request for payment, and it means that your balance post accounts payable will increase. This was about purchases. Let's go on to the next part, and we're going to talk about value added tax. Thank you very much for watching.